Overall we'd see costs go up somewhere between 1 and 3%. And I would stay, I think, I would stay with that estimate right now. It's always hard to predict, how things are going to turn out, because there's always some unexpected events that will impact some of the fundamentals of some of the different inputs, or there can be it's political disruption, like what's going on over in Ukraine right now. They're a major, exporter of fertilizer, so that can throw some of the markets into a bit of a turmoil that, causes either prices to go up or go down more than anticipated. So I think once you factor in some of the things that are going up more than maybe I thought they would, or some that are going to potentially not go up as much, I would still think that in aggregate that 1 to 3% increase is about where we're going to stay with regard to input costs for potatoes. And again, I'm talking about on a per acre basis. Again, I'm not sure quite how the growing season is going to turn out, so yields are still a question mark. And so if costs go up, 1 to 3% on a per acre basis, if yields go up, then on a per hundredweight basis, they won't be up quite as much. If yields go down, then you'll see even more of an increase. And so I always want to make sure that people understand when I'm talking about those cost increases, I'm talking about on a per acre basis, not necessarily on a per hundred. Roughly about 60% of the operating costs then, for potatoes are in three classes of input: seed, fertilizer, and chemicals. And so that's kind of ones to kind of pay attention to. Seed costs, again, I think they're fairly close to where they were last year. I didn't see a lot of change. Looking at fertilizer costs are down compared to what they were a year ago, but the overall trend so far this year has been up. So it's kind of an odd situation. Prices really dropped dramatically last year on fertilizer. They went up from, let's say, the beginning of 2013 in that January to March, April time period, and then they just sort of plummeted going into last fall. And growers that put their phosphate on in the fall, it's fairly common at least in Idaho, they probably benefited from some of those lower costs. Fertilizer prices have reversed from that time period, but still they're below where we were a year ago. If you look in aggregate across nitrogen, we're down somewhere between 5 and 25%, depending on which product that you're looking at. Again, there's a lot of variation. I don't understand sometimes why some of those products don't move quite in lockstep with one another. But again, I just don't always understand completely the fundamentals of some of those markets. So if you're looking at phosphate compared to a year ago, it's probably down somewhere between 5 to 15%, and potash is probably down about 10 to 20%. But again, the trend seems to be up right now. If you look at the overall fundamentals in the fertilizer markets, because of the extreme high prices we got, because commodity prices went up, the big increase in demand, that pushed up the manufacturing or increased the supply. There was a lot of push to take advantage of those higher prices. They've expanded the production capacity, or the mines have come online, for example, with potash. So now on the fundamental side, supply is probably, the market's probably oversupplied. So for the next couple of years, we should be in pretty good shape to see prices, not go through the volatility that we saw over the last 5 or 6 years, particularly, peaking in some of those big price spikes we saw in 2008. I don't think we're going to see a repeat of that. But again, the wild card there gets to be some of the political instability in some of those countries that are major exporters. Again, Russia, Ukraine, that's a wild card. And China is another wild card. They've got into where they were exporting more than a lot of people had forecast, and that's actually helped push prices down. And so it's trying to predict what some of these countries are going to do that are not necessarily always been major players in there. But again, the fertilizer situation is certainly not as dire as it had been in the past, and overall the aggregate cost is down compared to what it was a year ago. On the chemicals, again, those have been fairly stable. The price increases, have been at 1 or 2% in aggregate. Again, some of the newer products coming out are more expensive because the manufacturers have to recover their investment initially, and so some growers that are switching products are going to see bigger increases than the 1 or 2% that I'm forecasting in aggregate across their insecticides, fungicides, and other type of products that they're putting on. But again, they've been very stable overall in terms of what those prices. That's the situation. And so if you were losing money this year and your costs go up 2%, hopefully the prices are going to move up so you can recover that. So it always has to be put in that context. 2% may not seem like a big increase, but if you're already losing money, that means you're going to lose more money next year if we don't see a price improvement, particularly on that fresh market.